All right, good evening. For tonight, I'm about to share my screen. So this webinar is going to be on the auditing process, and this one might be shorter than the other ones that I have previously recorded. So we're just going to start off with the introduction. Actually, just now realized I forgot to update the menu, so we'll just hop into the video. The first part is the introduction. I am working, well, always my plan, just as far as instructions, was to not always speak through the webinars. It's just sometimes I don't have enough time to put everything into videos like I'd like, but I actually had time this week, so we're going to watch a couple videos about the auditing process, which is this is just my instructional videos that I use for my courses. It's not a lot of graphics or anything, just information. Just making sure nobody was trying to get in, and making sure my audio is good too for the video. So this one is just the auditing process for tax, well, it's introduction to the auditing process for tax professionals. So this is just going to be teaching you about what the auditing process is.
This video is on the auditing process and importance. The auditing process in a tax office is a critical mechanism for ensuring accuracy, integrity, compliance, and ethical standards in tax-related operations. While the specifics of the process may vary from office to office, its primary purpose remains the same: to review, verify, and validate tax filings and documentation submitted by clients. Implementing a robust auditing process is not just a regulatory formality. It is a vital practice that safeguards the interests of clients, minimizes risks, enhances trust, and upholds professional standards within the tax industry. Understanding the significance of this process and why it must be integrated into the core functioning of any tax office underscores its indispensable role in achieving and maintaining excellence in the field of tax preparation and compliance, promoting compliance and legal adherence. Tax laws and regulations are highly complex and subject to continuous change. Keeping up with these changes is essential for tax professionals, as even a minor deviation from the law can lead to significant financial penalties, audits, or legal consequences for clients. A properly implemented auditing process helps tax offices ensure compliance by thoroughly reviewing every aspect of a client's filing, from income statements to deductions and credits. This detailed scrutiny minimizes the risk of errors or omissions, ensuring that filings meet all applicable legal standards and adhere to the most current regulations. By doing so, tax offices protect their clients from potential penalties and demonstrate their commitment to providing legally sound and trustworthy services, reducing errors and increasing accuracy. Given the complexity of tax preparation, errors can and do happen. Mistakes may include incorrect calculations, missing documentation, or discrepancies between reported figures. Such errors, whether minor or major, can lead to delayed processing, denied claims, or even audits. A well-structured auditing process acts as a safety net, capturing mistakes and inaccuracies before they reach the submission stage. This proactive approach helps ensure that clients' tax returns are accurate, reducing the likelihood of disputes with tax authorities and avoiding the associated costs and inconveniences of amending returns. By minimizing errors, tax offices can improve their operational efficiency and enhance the quality of services they offer, mitigating the risk of fraud and misrepresentation. Fraud is a serious concern in the tax industry. Instances of identity theft, false claims, or misrepresented income and deductions can have severe consequences for both clients and tax offices. An auditing process serves as a critical defense against such fraudulent activities by implementing checks and verifications that detect and prevent fraud. Through thorough reviews and the requirement of supporting documentation, Tax offices can identify potential red flags and take appropriate action to protect their clients and maintain compliance with the law. This proactive stance against fraud not only protects clients but also shields the tax office itself from reputational and legal risks, enhancing client trust and confidence. When clients entrust their sensitive financial and personal information to a tax office, they expect it to be handled with the utmost care, accuracy, and integrity. An effective auditing process reassures clients that their data is being reviewed, verified, and processed with the highest standards of diligence and professionalism. This fosters a strong sense of trust and confidence in the services provided by the tax office. Clients who feel secure in the knowledge that their returns are accurate, compliant, and thoroughly reviewed are more likely to return for future services and recommend the office to others. By investing in a robust auditing process, tax offices can strengthen their reputation and build long-term relationships with clients based on trust and reliability. Supporting ethical standards and professional integrity. Tax professionals are held to high ethical standards, which demand honesty, transparency, and diligence in their work. Upholding these standards is critical to maintaining the credibility and trustworthiness of the tax industry as a whole. The auditing process reinforces ethical practices by requiring thorough and accurate verification of all client data and documentation. By implementing this process, tax offices demonstrate their commitment to conducting business with integrity, ensuring that every filing meets the highest standards of accuracy and compliance. This emphasis on ethics and accountability helps foster a culture of professionalism within the office and strengthens its standing within the industry and among clients. Minimizing liability and managing risks. Tax filings that contain errors, omissions, or inaccuracies can expose clients and tax offices to a range of risks, including penalties, audits, and legal disputes. A comprehensive auditing process serves as a vital risk management tool, identifying potential issues before they escalate into more serious problems. By systematically reviewing each filing, tax offices can address discrepancies, ensure compliance, and create an audit trail that demonstrates their commitment to due diligence and regulatory adherence. This approach not only minimizes liability for the tax office, but also provides clients with peace of mind, knowing that their returns have been prepared with care and attention to detail. Increasing operational efficiency and cost-effectiveness. While auditing may require an upfront investment of time and resources, it ultimately leads to increased operational efficiency within a tax office. By identifying and addressing errors or discrepancies early in the process, the need for time-consuming revisions or client follow-ups is significantly reduced. This streamlined approach allows tax professionals to focus their efforts on providing exceptional service to their clients and staying current with regulatory changes. Moreover, a well-organized auditing process can reduce the frequency of client disputes, minimizing wasted time and resources. The end result is a more efficient and effective operation that delivers higher quality services with fewer disruptions, establishing a culture of accountability and continuous improvement. The auditing process is a key component of fostering a culture of accountability and continuous improvement within a tax office. By implementing a structured system for reviewing and verifying tax filings, professionals are held to consistent standards of accuracy and compliance. This not only ensures that errors and discrepancies are addressed promptly, but also encourages tax professionals to remain vigilant and committed to staying informed about regulatory changes and best practices. Over time, this culture of accountability leads to better outcomes for clients, enhanced team performance, and a strengthened reputation for the tax office as a whole. Demonstrating a commitment to client service excellence. Providing exceptional client service is a cornerstone of any successful tax office. The auditing process plays a critical role in achieving this goal by ensuring that every client's tax return is accurate, compliant, and thoroughly reviewed. Clients who receive high-quality service are more likely to develop long-term relationships with the tax office and recommend its services to others. An effective auditing process highlights a tax office's commitment to going above and beyond for its clients, offering peace of mind and demonstrating the value of professional expertise. Adapting to regulatory changes and complexity. Tax laws are subject to frequent changes and can vary significantly depending on the jurisdiction and client-specific circumstances. Adapting to these changes and managing the complexity of tax filings requires diligence, expertise, and a systematic approach. An auditing process helps tax offices stay up to date with these changes by ensuring that all filings are reviewed for compliance with the latest regulations. This ability to navigate complexity and stay current with regulatory developments further enhances the value and expertise of the tax office. In conclusion, the auditing process is a crucial element of a tax office's operations, providing a framework for accuracy, compliance, risk management, and client service excellence. By implementing and maintaining this process, tax offices can ensure that their work meets the highest standards of professionalism and integrity, ultimately benefiting both their clients and the broader industry.
All right, I'm just gonna check. All right, there are people that needed to get in here. Or maybe not. Yeah, I don't know what happened. Oh, okay. People did come in. All right. I don't know if anybody else still needs to get in. I'm just waiting a few minutes. I know somebody else was trying to join. I don't know if they're gonna try it again before I get started on the next part. Well, actually, I'm gonna talk about that video first before I get started on the next part. Okay, hopefully it will beep or something. So as that video was just explaining, I'm not sure if you've ever been involved or known about the auditing process, because it can vary depending on everybody's setup. I've been at a few different companies and been auditor or head of compliance. It could be a different title depending on where you worked at, or what type of education you're used to from in the tax industry. But it can be set up a lot of different ways. Somebody might, you might not know what an auditor is, but an auditor is just somebody who reviews the documents as far as making sure that everything has like the .id or those types of things in the documents. But I'm gonna check real fast just to make sure nobody else is trying to get into here. Just making sure. Okay, so as far as the auditing process, once again, so as far as me, as the roles of being an auditor, it also depends on your business base. I mean, your with how you have your business set up. So my original position with the company, which was with my mentor, I was the head of compliance at their company, which once again, different term, but still, once again, is basically an auditor. So with them, the way that they had their company set up, because everybody's company needs are different, they didn't really do a lot of tax preparation. They did pretty much kind of like what I do, is mainly software focused, and people who actually just need the software, or mobile agents. I don't do as many mobile agents just because the compliance can be very time consuming, and I only have my positions limited because I know that I only have a certain amount of time to commit to compliance, because I do have more clients than my previous employers did. They didn't really, once again, take clients. So what they had their company set up, since they didn't take clients, they had time to, have auditing. And at that time in my position, that was my full-time job. I worked from like 10 to 7-ish on a normal day. And it was once again, everybody's setup is different, because this setup with them was not as time consuming as far as my daily job duties, because it was I didn't have to maximize refunds. So that right there, as far as a job detail, is for what you're looking for, that also depends on experience. And at the time, I didn't have the expertise to be someone that could maximize refunds. So my main um, job detail was making sure that the documents were in the file. But maximizing refunds is something that comes with expertise and time, and not everybody's suitable for that position. But by the time I had my second auditing position, I did have the expertise and I did maximize refunds, and it was very time consuming, which I will talk about that later. Let me just check again for the what's the number to do?
Two players that you can learn up a lot. I told you that. I told you that. Download the price app.
So going back to the first position, so in my first position, I was, they would have an email compliance, I forgot, at some Gmail or whatever.com, and they would have everybody send in the required documents. And before everybody got their paychecks, I would go over their files and pretty much just make sure IDs for the dependents, documents. Oh, and this is mainly for P10 users. You don't really need to do this for EROs. So EROs, your compliance is just, which you're probably not into that yet, as far as you're not that far advanced yet, but EROs for compliance, that you just need to make sure you have your information for that actual ERO. You don't need it for each client. So really, as far as compliance and audit, and this is only for people who use your EFIN, because as the EFIN holder, you're liable for anything submitted under your EFIN, which means that you have to, once again, have IDs and documents for dependents, proof of income. And really a big thing in the industry for the last couple years, especially with the preparers audits, is income. Because yes, it's very easy to prove identity, but income might not be as easy to prove, especially if the taxpayer is someone who really doesn't work all year, or if the taxpayer has wrote off a lot of expenses that they cannot prove. Those are the two easiest ways to lose your PTN or get tons of fines and fees that you don't need, or even to have your clients audited and they cannot, they'll get a large bill. So those things you kind of want to stay away from. You can't prove it. So once again, if you have the proof for the income and proof for all the expenses, is perfectly fine. But this auditing process is set up because if people use your EFIN and they process these claims that have all this bogus income and all these bogus credit claims, it will potentially mess you up. And they also have been monitoring EFINs for rejects. So if you also have a lot of rejects to your EFIN, which means it was rejected right when you sent it off and you did not correct it throughout the year, they will send a letter to the taxpayer, for one. That was a new thing this year. They will mail them out and you have to correct them. And if you have I don't know the specific ratio, but it depends on your numbers. But if you consistently have too many rejects, they will shut your EFIN down. So keep that in mind. So going back to the auditing process. So that was the original company's auditing process. And then they also, with the mobile agents are treated more like independent contractors. So as an independent contractor, you're responsible for your own education, pretty much. Like, we can give you a little bit here and there, but as far as your main compliance and how you handle your business and your business name and all those things are pretty much up to you. So that business, they didn't ask for minimum information, but it still worked out because it was what the IRS needed. And so for my second auditing position, I have worked with this company in recent years. They had multiple locations, and their main income was tax clients, like, people who actually file taxes. So they did not do much of any software, or they do have employees, but they had employees. They didn't have independent contractors, so things worked slightly different. When you have an employee, you have to put a lot more effort into Um, you have to put a lot more effort into training them, into maintaining them, paying them sometimes. It's just a lot more effort. So keep that in mind as far as when deciding what you want to do as far as an employee or a contractor. So just to kind of give a little bit of difference in their process, with the person who had the independent contractor, they were paying like 50% to their people because they were putting 50% effort, and the tax pro was putting in 50% of the effort, and they didn't have any sorry, they didn't have any access to anything outside of advance loans. So, like, any additional promotions, if they did referrals, that's pretty much up to them. But it didn't come out of any company money. It would come out their money, which means, of course, their percentage would be something they'd have to pay out. So, with the company that I worked for the second time who had employees, they were paid 20% because the client, I mean, the employee pretty much was doing about 20% of work. So the company did majority of the training. They set up everything. They did other company promotions. Like sometimes they'll do $175 on the spot, $150 on the spot, $100 on the spot, stuff, those types of things. They had the free government phones, and we did free vacations, just different types of promotions. But the tax pros got to take advantage of every promotion that we were offering as a company, as opposed to the other company, which only people who actually work for them as an employee could offer those promotions. So it's just, keep in mind with the auditing process, and well, really just with employees as far as promotion costs. If this is your first year as an ERO and you have not gone over your bank and signed up, sorry, signed up with your bank yet, or went over your agreement and actually looked at the cost of everything, the advance, as far as your client getting advances, starting January 2nd, those things cost the ERO money. So if you're the owner, it will cost you money depending on the bank. I think they range well, it also depends on if it's pre-act and in season too. So I say at the lowest because in season is the lowest of the prices. The lowest can be $29, and the highest I believe is like $125. So just keep those things in mind when you figure out your pricing, because technically by bank standards you're not allowed to charge additional money for advance. So basically what that means is, yes, you are allowed to raise your prices to account for any business costs, but you cannot potentially seek out one client that is getting a refund, I mean, that is getting an advance, and another client that's not getting an advance, and charge the client who is getting an advance additional money because they are applying for the advance. That technically by bank standards is illegal for you to do. And if they ever, because they do have secret shoppers, you might not experience it too much, especially if you have a virtual location. But even the both companies that I worked for who have physical locations, they did experience secret shoppers during the tax season, and they were from the bank, and sometimes they were from the IRS. So they do actually have people come in that will try to pretend to file their taxes with you. Once again, if you have a physical location, and they will ask you these questions just so they can violate you and shut down your office. So keep that in mind when figuring out your prices too. So you won't be blindsided and end up, of course, with less money in your pocket because you aren't charging for these additional fees or taking these things into account. So, you should probably meet somewhere in the middle as far as the cost, or also do, I've been talking about analytics this, over our time that we've been doing these webinars, and probably do some analytics on if you offer that many advances as opposed to the people who might not get advances. So, for example, if your client base is like 90% advances, then you should probably, raise your prices higher than somebody who might have only like 25% advances. So, and then with the other company, as far as doing auditing, Well, another key difference. The first company I did auditing with, I was the only auditor. And they process is very simple, and it was enough for me to be able to do within my job. And honestly, they had like 1,000 preparers. I'd say only maybe like 300 or 400 was really processing. And even with 300 to 400 preparers processing, on a weekly basis, I was never overwhelmed with my job position. Pretty much had tons of time all the time. And I would do other things, with my time, because technically I wasn't just the head of compliance with them. I was their secretary, so I did other clerical duties. But I can honestly say with my second position, and then once again, them probably 300 or 400 preparers probably did at least, um, I want to say a range of maybe 10-ish thousand clients. And once again, I felt like I was not overwhelmed. The second company, they only did about 1,000 clients. And I had a lot less time to myself because once again, that maximizing the refund, that was a big time consuming thing. So if that is a part of your process, or if you are the person that's going to be maximizing the refunds, just keep in mind that is very, very, very time consuming. So with my experience with that, I had a lot of tax pros. So of course they have changes every year for the IRS process, and then of course they have changes every year in the software. Sometimes the changes in the IRS actual tax code may look very differently in the software. So for example, in these past couple years, and this is not something that you may have not noticed either, but they have a trick question on the Schedule C now. It says, check here if this business has been established in this year, and it'll say the actual year. So for example, if it was 2022, it'll say check here if the business was established in 2022. And then if it's 2023, same thing, check here if the business was established in 2023. So they have that check, they have that box there. During the auditing process, me being people who process under my EFIN, I have a very high code of ethics. So, and once again, I've been doing this for 12 years. So I do want things a specific way. And those are one of my things that it will not pass the auditing process. Or, I mean, I would just go ahead and check the information, but I would still go back and educate on it too. But it still, once again, was time consuming because if it's processed under my EFIN, it has to be correct. And a lot of people would skip that question. And that question is actually designed to trigger an audit. So a lot of these things for the past couple of years, they added additional trick questions to trigger audits. And if you get too many of them on your PTN, that's when you'll get an audit pool. So me knowing that and me being the person that I am, I'm trying to help my team get less audits, of course. So I'm checking me being the auditor, I'm checking the questions, and I'm getting about probably 100 returns ish a week, and checking 100 returns ish a week, going over them and then actually maximizing their refund. And sometimes throughout the process, I'd actually have to reject the return too. So let's say they didn't have certain required documents. So then I would have to send it back to the tax pro. Then which we'll go over in a moment, the notes process, I would put in the notes and then have to wait for them to read the notes and then, fix the error, send it back through again, which I will go through that process as well, or show you in the software how you send things for review. But it's, once again, it's very time consuming, but it's also based on what you educate your tax pro on throughout the season, as far as what you would actually want them to do. Or I probably actually did forget the one review process, which I'll have to send it out or put it in the resource center as far as the auditing process, because I got the description and I got the notes and the videos about it. But the one thing I did kind of forget is your actual requirements as far as what would be a pass or a fail. So Once again, I will, send that out to you guys later. So a pass, obviously, it's just saying that it passed the auditing process, is getting sent off to the IRS. A fail means that it failed your process. And certain things, for example, no ID, no social security card for any of the people on the return, those types of things are automatic fails. But it's more so about those in between things that you kind of can choose for yourself as far as what you want to be automatic fail, like income, for example. Some tax offices, as far as especially Schedule C income, some people do not require the income to be in the file. Some people do. So that's your personal preference on your experience as far as your tax filing process. And with me, I my first company wasn't my EFIN. I was just their compliance person. So they didn't require the Schedule C income on there. The second one, it was my personal EFIN, and I didn't require exactly the income, but I did require the self-employment form. So if you are a partner with me and you have the software and the forms, I mean the website and the forms included, there's a self-employment questionnaire. It mimics the Schedule C as far as income and expenses. So I did allow that to be passed through as a we have a soft audit pass and a hard audit pass. So hard audit pass means that it has all the information the way the IRS intends, which means, if it's a Schedule C, they have income receipts, maybe a 1099, bank statement, something along those lines that would actually pass a real audit. And which of course is the IRS mailing you saying you've been audited. And then a soft audit pass just means that they've passed your requirements of auditing. And once again, those may be more minimal, just as far as because we need to get these returns out, and then you'll contact your client later to get the information that is required. Or sometimes tax professionals, they actually just wait until they get a real audit, and then they actually reach out to their client. Well, usually it goes to the client first. So the client will actually reach out to you, and then they'll ask you for help on the audit, and you just let them know, hey, send this stuff in, and then assist them with the audit. But all these things are, once again, your preference, because I feel like everyone has their own ethical code as far as how they prepare taxes on their own. So you might say, once again, oh, I don't think the Schedule C income is that important because I've never, experienced it where I've needed it, or, different things. I've had people who have been audited and they have really bad experiences. So then, yes, they do make it mandatory for their team because they went through the experiences that make it mandatory. Um, I was going to say something, but it might not be best to say it on a recording. So, but just in the best way to say it is just with me, as far as if you're on my team, like my actual software team, you have a little better, um, what's the word for it? You have with me being your mentor, it'd be easier for you to pass audits with me as opposed to you trying to do it by yourself. So with the auditing process, you can use the CRM or the mobile app if you have TaxSlayer. And I have this video that I'm about to play just as far as, using technology to improve your auditing process. I prefer TaxSlayer as far as their auditing process and using their mobile app, but I do recommend keeping a copy of your information in a CRM or a Google Drive, because if you don't know already, with TaxSlayer, when you keep it in the scanned documents, when it comes time, which is like right now, pretty much, I think they just updated it like a week and a half ago. When they update the mobile app, when they update the software for the current tax year, it will wipe out your information, like the scanned documents that say for the previous tax year, for you and your client. So I also, like, last year was the first year that I really because this was the first couple years that with this new company we use TaxSlayer with our auditing Because with the other company, we didn't use TaxSlayer as far as the notes and what I'm about to go over next and those types of things. We didn't use that in our process because once again, it was pretty much ID and it was no income involved and, those other things that I mentioned. And I do think the notes and stuff like that and abbreviations and with the TaxSlayer is a lot easier, especially, well, I had back end managers as well. So with the other company, it was just me and I wouldn't have to relay messages to other people. But if you have a big team and you have a lot of people to audit and relay messages to, you might think of we had like the master auditor, which was the highest position. And then we had something called back end members that would be basically secretaries to the auditor and help with the auditing process. So those back end team members, they would have to relay messages to me. So I created a note process, like a shorthand type of thing. So the messages would be faster, and also it would be how I relay messages to the tax pros as far as when they didn't meet certain requirements and had certain documents failed. So, oh, and then if you're with OLT, you don't have an option of a mobile app, so pretty much rely on a CRM and Google Drive. And also, as far as the CRM and the Google Drive, I personally always had backup on top of backups because just like you can't just rely on anything. CRMs can go down, Google can go down, your computer can go down. So you should always have different ways to access information, especially customer information that is you might need for future years to come, like the actual tax returns. As far as their documents like IDs and all those things like that, maybe keep IDs on file as long as the information is secure and some information, but try to minimize the type of information that you keep on file for your client, especially like on your actual computer or stuff like that. Because let's say your computer gets stolen, that is obviously somebody has now access to people's personal information. So make sure that whatever you use is encrypted and it's secure if you're going to house people information. When I was the auditor, I would always just clear my computer at the end of the day. And same thing for the back end members. They were instructed to clear their computers by the end of the day. But the scanned documents, it'll always still be in the scanned documents because once again, TaxSlayer is secure in the CRM. So I'm about to just open up this next video.
In this video, we will discuss the overview of document upload requirements, ensuring compliance and accuracy. In the tax preparation process, accurately uploading identifying documents is critical for verifying client information and adhering to regulatory requirements. These documents, which may include government-issued IDs, social security numbers, income statements, and other financial records, play a fundamental role in preventing fraud, establishing legal identity, and ensuring the accurate reporting of taxable income. The accuracy and completeness of document uploads are not only essential for compliance purposes, but also protect both clients and tax professionals from potential penalties or legal repercussions. Types of identifying documents needed. The specific documents required for tax filing vary depending on the individual circumstances of each client. However, some of the most commonly required identifying documents include government-issued identification. This includes driver's licenses, state-issued ID cards, U.S. passports, or foreign passports. These documents are used to verify the identity of the taxpayer and any dependents, if applicable. Social Security numbers, SSNs. A taxpayer's Social Security number, as well as those of any dependents, must be accurately provided to ensure proper identification and to qualify for certain tax benefits and credits. Income documents. This may include W-2 forms from employers, 1099 forms for self-employed individuals or those with additional income streams, and investment income documents. These forms document taxable income and are critical for calculating tax liability. proof of expenses and deductions, receipts, medical records, charitable contributions, mortgage interest statements, and other relevant documents may be needed to substantiate deductions and credits claimed on a tax return. Taxpayer Identification Number, TN, for non-U.S. citizens. Non-U.S. citizens who need to file taxes in the U.S. may be required to provide an individual taxpayer identification number, ITIN, along with supporting documentation. Why accurate document uploads are critical. Accurate and complete document submission is vital for several reasons. Compliance. Tax filings must adhere to stringent legal and regulatory standards. Failure to provide accurate documentation can lead to audits, penalties, and even legal action by tax authorities. Fraud prevention. Verifying identifying documents helps prevent identity theft and tax fraud, such as filing false claims under another person's identity. Accurate tax calculation. Providing all relevant documents ensures that income, deductions, and credits are accurately reported, leading to a correct calculation of the taxpayer's liability or refund. Building trust. Clients expect their tax preparers to handle their documents and data accurately and responsibly. By ensuring accuracy, tax professionals demonstrate professionalism and maintain client trust. Ensuring accuracy in submission. To maintain the highest levels of accuracy, tax professionals should double-check all submissions, carefully review each document to ensure names, social security numbers, and income figures are correct and consistent, require up-to-date and unexpired documents. Verifying that clients provide valid and current IDs and supporting paperwork is critical. Utilize technology. Software and digital platforms can automate document checks, flagging incomplete or inconsistent data. Scanning technologies, for instance, may detect missing pages or unreadable information. Secure storage and encryption. Documents should be uploaded and stored securely, using encrypted systems to protect sensitive information from unauthorized access. Differences between using a CRM and the taxpayer official mobile app. When it comes to managing document uploads, tax offices often have the option of using a customer relationship management, CRM system, or a taxpayer's official mobile app. Each option has distinct advantages and drawbacks, depending on the needs and structure of the tax office. Using a CRM for document management. A CRM system is a comprehensive platform designed to manage customer interactions and streamline workflows in a tax office. For document uploads, CRMs offer centralized data management. All client documents are stored in one secure location, making it easier for tax professionals to access, review, and verify them. Workflow automation. Many CRMs have features that automatically notify tax professionals when a document is missing, outdated, or requires review. This improves accuracy and reduces manual work. Customizability. CRMs can often be tailored to the specific needs of a tax office, providing tools for communication, task management, and compliance checks. Enhanced collaboration. CRMs facilitate internal communication between team members, enabling seamless sharing of client data and efficient problem-solving when discrepancies arise. However, using a CRM may require integration with other tools, additional costs, and regular maintenance. Staff training is also necessary to maximize its features and benefits, using the Taxpayer Official mobile app. The Taxpayer's Official mobile app, if offered by a tax agency, is typically a straightforward tool for document uploads and tax filing submissions. Its benefits include user-friendly experience. Taxpayers can quickly and easily upload their documents directly from their smartphones, reducing the need for in-person meetings or paper-based processes. Real-time updates. Clients may receive real-time updates on the status of their submissions and any necessary corrections, fostering transparency and engagement. Direct integration with tax authorities. In some cases, mobile apps may be directly integrated with government systems, streamlining the filing process and ensuring instant validation. Cost savings. Using a mobile app eliminates the need for certain overhead costs associated with maintaining complex CRM systems. However, there are some limitations to using a mobile app. Limited customization. Unlike CRMs, mobile apps may have fixed functions that cannot be tailored to the specific needs of a tax office. Security concerns. Although mobile apps are designed with security in mind, there is a risk of data breaches if devices are compromised. Data entry limitations. Clients may make errors when entering data or uploading documents due to limited app functionality or a lack of familiarity with technology. Conclusion. The choice between using a CRM system or a taxpayer's official mobile app for document uploads depends on the specific needs, resources, and workflows of a tax office. Both solutions offer unique benefits for ensuring compliance, accuracy, and efficiency in handling identifying documents. Regardless of the method chosen, maintaining accuracy and safeguarding sensitive information are paramount for building client trust and ensuring regulatory compliance. Properly managing document uploads enhances the credibility of tax professionals and strengthens the overall success of a tax office.
So that video, once again, was about the mobile app and the CRM. I would, suggest using both really. Just exit out of that and all right, let me just click that. Sorry, I had a lot of videos. Okay, so I also made this. These documents that I'm about to go over now, along with that one I said I was going to add later too, will be in the resource center. So you can go to these to download these documents if you need them. So this is just the auditor description template. I do have the audio for this too, so I don't have to read it. Give me a second to play it.
In this video, we will introduce the role of a tax auditor in a tax office and provide a comprehensive overview of the key responsibilities, qualifications, and required competencies. The tax auditor's primary role is to conduct thorough reviews of clients' tax filings, financial records, and supporting documentation to ensure accuracy, compliance with applicable tax laws, and adherence to ethical standards. This role requires strong analytical abilities, excellent communication skills, and a commitment to delivering high-quality service. Key responsibilities. Covered. Examine and verify client documentation. We'll walk you through how to review client-provided financial statements, receipts, tax forms, and other supporting documents to ensure accuracy and completeness, while adhering to current tax laws and regulations. Compliance checks. Learn how to assess and confirm compliance with relevant local, state, and federal tax codes. We'll cover how to identify and resolve any discrepancies or errors in tax filings by collaborating with clients and tax preparers. Risk assessment and fraud prevention. Understand how to proactively identify signs of fraud, misrepresentation, or inaccuracies and the recommended actions to prevent fraudulent claims. Communicate findings and recommendations. We'll explain how to present findings clearly and concisely to clients and internal staff, along with effective methods for recommending corrections and resolving discrepancies. Document and maintain audit records. We'll cover how to accurately record audit findings, maintain detailed records of the process and results, and ensure secure storage of documentation in compliance with data protection standards. Provide guidance on best practices. Learn how to assist clients and colleagues in maintaining accurate tax records, staying current with changes in tax regulations, and sharing relevant updates with the team. Assist with training and development. This includes supporting the training of new staff and conducting internal audits to ensure consistency and adherence to office standards. Qualifications and competencies. Discussed. Required qualifications, such as a bachelor's degree in accounting or finance, relevant experience, and in-depth knowledge of tax regulations. Key competencies like integrity, analytical thinking, attention to detail, and effective communication. All of the information is optional and just something to give you a guide of who your ideal auditor may be.
So, like the video, I mean, the audio was supposed to be a video said, it's just, optional, but, mainly with the qualifications, because I mean, I don't even have a bachelor's degree in accounting, but I've been auditor at plenty of companies. So it's your personal preference, but, some jobs do put, those things down as far as the actual job description, because, you do want to, probably go on like job messaging boards or even post, something like this within the tax groups, and you'll be able to find an auditor with some type of experience. Because once you find an auditor, I'd say it's like, you should pretty much stick with that person. Auditing, once you get with a good team, as far as someone being an auditor, you pretty much stick with that person. Um, and also with the job qualifications, whatever job qualifications you end up saying, so you can either go with this or go with something else, change some things, tweak some things. It doesn't matter. But whatever your finalized product is and what you give to the person that you actually want to hire, make sure that you adhere to those things. So do not add additional job duties without talking to them and discussing it with them, and usually probably having some type of pay raise with it, because that's what a good employer does. So, with my previous job, the most recent one where we had tons of, or I had to do a lot of maximizing the refund, um, that was one of my main things that I did not like working with that company, was that they would have you do a lot of things outside of your job duty, and that was their overall way of managing their business. And they did it to not just me, but to anybody who worked for them. And a lot of their people this year quit. Once again, me and tons of other people. And it's just like everybody had the same general consensus about that. Like they hated that they had to do so much outside their actual job titles. And I'm pretty sure even in your experience, of probably working, you've been at jobs where if they consistently ask you to do something that's not your job, it gets frustrating after a while, because once again, you get paid to do your job. So just keep that in mind. Whatever you have the person agree to, you don't do too much outside of that, and make sure that the pay reflects the actual job position. Um, I think that's pretty much everything I wanted to say about this. So as far as once you get the actual job auditor, I mean, sorry, job auditor, the tax auditor, you can set up your own type of workflow with them. As far as, once again, if you have just them in charge of doing compliance checks, or if you have a team. So as far as if you want to give them people to train, or sometimes if you don't have like them actually training the back end members, you can also add, this also depends on experience. You can ask your auditor to help train your tax pros, because usually if your auditor is somebody that is able to maximize refunds, then they're probably one of the most educated people at your tax office. So you should be able to utilize those things outside of just auditing. And also, if this person is rejecting returns based on tax knowledge, that means that that is the opportunity to educate the tax pro on things that they did wrong, which is, in that turn, when you're educating somebody on what they did wrong, you're teaching them anyway. And that was something that I had to do a lot of times. So also with this second company I worked for, they wanted so bad for, they had a front end manager and a back end manager, which the back end manager was the master auditor. So the front end manager was supposed to be in charge of the tax pros, because typically a master auditor is not the is typically like I would say a nerd type of person, or not an introvert, not a person that's very outgoing and very um you know promotional, I would say. So usually the person at the office that's more of outgoing person would be like a front end manager, somebody who's used to dealing with clients, who's used to being peppy and motivating people. So with that, they had a front end manager, and they wanted the front end manager to be the main person to talk to the actual tax pros who's doing the clients, and then the master auditor to be the main person who talked to the people who are doing the back end team members. Um, so sorry, I was just checking my phone. Um, but yeah, so they would, manage the back end members. And then so with that, it was supposed to be people who they went through the actual I'm sorry, the front end manager would contact the master auditor on what the person, I'm sorry, actually, that's backwards. The master auditor would contact the front end manager when they actually did something wrong instead of contacting the tax pro directly. But it ended up being that was the plan before tax season. But during tax season, it ended up being a lot of things going on to where that plan didn't work out because sometimes me being the master auditor and the front end manager, we wouldn't be there at the same type of times because our schedule would work differently. And if some tax pros didn't even come to the location, so they would work virtually, and the only way I'd be able to communicate with them was by giving them the actual notes in the software. So, or contacting them by phone if they didn't, because some people didn't understand the notes in the software, and you would have to actually reach out to them a few times to actually get them to get accustomed to the method of um viewing their notes. So I'm about to go over the notes. So I'm actually before I go to the actual notes, I'm gonna just show you guys what the note is. I'm about to disconnect it just because I'm about to put in my password. Uh, oh, but yeah, I'm about to log into my software. So I just I'll disconnect it so you won't see my password. Okay, so once in the software, actually, I do even have a client started. All right, so just create a return real fast because I don't even have a client in here. I did it in a different software. Also, keep in mind that software is going to be it's going to have a lot of errors for probably until January, probably first couple weeks. No, probably January, first week of January by the time the loans come out. But they still going to be making changes in the middle of January usually. So, I guess I can't hit the notes yet. Okay, so now we've opened up a return, and this is where you will see the notes. So, as you send a return for review, actually, just go through that right now too. Uh, I think that that's not gonna pull up because of the bank product. Well, anyway, you could still go over here. So the notes I would have, well, actually, we can go back to the auditing process, but that once again is how you get to the notes. And this is what a note is. So the first note, I would have them titled assigned to and then their name. And this is exactly how I do it. Like, for example, I personally just always do caps, but it doesn't really matter. So I would have them assigned to, and then whoever the back end member was assigned to audit it before me, and then enter whatever information from the note, scan for the documents that may be missing, create a note. Oh, actually, sorry, I did that wrong. So it'll be assigned to, and then Jackie right there type thing. And then that would be one note. And then if it was passed, so they would say, let's, this is if they were passed, it would be like soft audit pass. And then if it was missing documents, it would be, well, actually, I'd have to delete that. And then just so you see there too, you cannot change them. You can only delete the notes. Well, if you have the permissions, certain people can't. If you have like tax pro permissions, missing. So let's say these are the missing codes. We did, have the, what is it called? The forms, the engagement letter, the direct deposit form, those things. Once again, as far as the self-employment questionnaire, I had that as a soft audit pass. But if you do not utilize some of these things, you can definitely take them out. I do have the lease here too. Lease is for people, of course, who's claiming head of household. That is also something that was not an automatic fail because people can, they were able to submit their leases later if they need to. But it would still be something. I would, even if it was like a soft audit pass and they did have documents missing, but it was enough to file, I would still have them record whatever documents were missing just so we could follow up after tax season. So, just for example, let's just say that they were missing an engagement letter, which that would be actually a fail. I think it was ENG. Yep, ENG for engagement letter. Let's say they was missing the dependent social security card and a 1098T just to put, stuff on here. And then when the so for one, that's how it would show up. And then when the tax pro would actually open up the return and see that their return was failed, it will pop up like a little message up here. And well, not actually in this section of the return, but it would just pop up as soon as they open the return as a message. And it would say your return was failed because, and it will say certain notes in there. So for this world, actually, it's not gonna. I was gonna actually show how to send it for review, but because my administrative rights are for the owner, it's not actually going to allow me to send it for review. I just thought about it, but if the person who is the tax pro who has the account, they don't have the permission rights of sending it off to the actual IRS, it's automatically going to prompt them to send it for review because there's no other option to send it for. So I'm gonna go back to the auditing process. So after, we just went over what this pretty much said. If they need the state, it will also, okay, I just thought about it too. Let me go back to here real fast. We can just go over tags, period. I don't have any in here because right now I don't utilize the back end members. So they have these things here called tags. I definitely suggest utilizing it if you haven't used it before. So for example, the team that I told you that I worked for last year, they had about 1,000 returns. I say out of those 1,000 returns, our state was Michigan. So our main thing, and there was other states, like some people had out of return states, but probably like 80% of the clientele was filing Michigan state returns. So January 2nd opens up. Everybody wants the advance loans, but it was around maybe January 25th-ish. Michigan opens up. And when you file them separately, that means you actually have to go back to the original return, no matter what the state is, because once again, usually states don't open up pretty much until at least the 15th or further. Between the 15th and the 31st, that's usually when states open. And once again, banks usually start accepting advances January 2nd. So there's pretty much no state that's going to be pushed through at the same time if they file that early. So I would create a tag, for example, state. And now that's a tag. So just for example, for me also as for the back end staff, we would have our names as tags, like me and the other employees. So you can actually keep up with, so you wouldn't have returned when you would complete the return, the employee who was actually handling the return would tag their name as well at the bottom, as well as in the notes, just to make sure that there was two records of who actually was working inside of the return. That's just if you have multiple employees and you need to keep track of those things. Well, multiple auditors, I would say. But the state tag is a very good one as far as and then also, of course, they had the BOIRs, the beneficial ownership reports. So if we also did that too, because last year, well, at the beginning of this year, it was just came into effect. So we went through and tagged all the people who were filing with business returns, Schedule C's and EINs attached, so we could go back later and notify them that they needed to complete the beneficial ownership report before the end of the year. So it's just any type of thing that you want to keep track of. And when you're filing clients and, one by one, and it ends up to be 1,000 clients, stuff like that, it really does help to be able to keep track of those things. So just to be able to show you what the tag can do, add tag it, state. And if you had like multiple clients in here, like, thousands, hundreds, whatever, you can literally just any status, any tag state, and those returns will pop up. And once again, you'd be able to go through all of those, and whichever ones that didn't file state, and you can see the state status here too. And once again, if they were unfiled, you'd be able to go through and file it. Or this one says tag for Jackie, and right now none of them are tagged for Jackie. So then it will only show those. So it's just good to be able to filter it. And also with the tax pros, even if they're not back end members, if you have just multiple tax pros working for you, it's an easy way to keep track of their returns. You can also search by, I guess you can't do it anymore. Well, they used to have it last year to where you could search it by the actual preparer, but and I guess it's now that they know that you can do tags. I guess they just want people to tag it. So that is the auditing method. Oh, I'm sorry. So if they need bookkeeping, I don't know if you do bookkeeping as well, but if you choose or decide to do bookkeeping, credit services, or any other additional services that you would like to keep up with within the service, you'd be able to do so as well. And I also did an approve. So once they were actually approved, you would be able to complete. I'm sorry, you would be able to tag it approved as well. And you can also tweak this auditing process if you would like to. And that's pretty much everything I have for tonight. If you have any questions, you can let me know or type it into the chat box. And if not, you can just log off for the night. I did add the BOI R video. I did add the what is it? The webinar from Thursday. And I am going to add these sheets into the resource center once the meeting's over with, and then edit this video as well.
Hey Jacqueline, what did you mean by when you said that you would maximize clients' returns on like while you were auditing?
So for example, sometimes I don't know why, but some people are taught to add a Schedule C onto every return, and sometimes it doesn't actually maximize someone's refund or just what is it? Reverse Schedule Cs. I would sometimes do reverse Schedule Cs on the client because actually the company I worked for previously, they didn't allow reverse Schedule Cs at all. So when I came to the company, they had people who get audited for reverse Schedule Cs really bad. So they almost lost their EFIN for it, and they banned it from their company. But in my history of my company, I had never received audit at all. So and definitely never a reverse Schedule C audit, and I do it for a lot of my clients. So, but they all actually have proof and everything's legit. So, I did offer it to certain clients who I knew that their customers had information and documents in their file, but they just were told that they couldn't do reverse Schedule Cs because of the people I worked for, and that would be maximizing their refund. Or also had a guy who he didn't know that disabled people could still qualify for additional credits, like as far as they will put them on the return. Well, actually, the person came into the office and I saw them physically, and I knew the person was disabled because I literally physically saw the person. And I looked over the return, and they actually sent it to me, and I'm in the back office auditing. And I noticed that the person didn't put down the other person as a dependent. And I talked to them about their relationship and, kind of went over those things with them, and they qualified to have that person down as a dependent. And the raise, originally, I think their refund was like $500 just with that person's W-2. And then when they added the person on there as a dependent, it ended up being like almost $2,000. So it's just like, a lot of things you would experience, you might recognize as the auditor or somebody that's been in the business for a while. But that new person, that guy that I was talking to, he didn't even know that people that were disabled could still qualify for tax credits.
Okay, that makes sense. And then what's a reverse Schedule C? Is that like a business law Schedule C?
Yeah, that's a reverse Schedule C in the industry. Yes, business laws.
Oh, okay, yeah, because that's kind of how I was taught with my previous ERO. He would just teach us to pretty much do a reverse Schedule C on our clients, even though we didn't really have receipts for that, if that makes sense.
Yeah, I get it because it is actually it's how my mentor taught me. But it's something that you kind of have to find your own way through based on your own experiences. Because me, once again, I've never been audited, but I also have seen people audit. Like I told you, I went with that girl. She had 67,000 audits. I've seen all of my summer. I've been doing helping people complete audits, and just going through the experience. It made me realize, for some people at least, if that refund is only probably raising about 500 ish, it's kind of not really worth it. But if it's making a difference for me, as far as this is how my discretion goes, but if it's making a difference between this person owing and potentially having zero, and not owing the IRS nothing and possibly not getting a refund at all, or it's thousands of dollars for this person, yeah, it might make sense, but it's pretty much your own discretion. And then with me, I told you, like, I can always have documents. It's just I'm also gonna charge that client for my time too. I'm not gonna, because my prices are pretty cheap. I pretty much charge like 200, 500 for a Schedule C type thing. So I'm not charging for me to go behind it and make documents. But if I do make documents, then I'm charging extra 250 to $500, because I know that I'm putting more. That's where that bookkeeping charge will come in.
Oh, okay. And so for those Schedule Cs, like say we get audited, is that something that you help us with, or do we need a seek representation for that?
I do help to an extent. Like, I help gather your documents. I help you through the process.